I'm waiting for oh, there it is. All right. Welcome everybody to today's Informative Friday session. We'll be talking about inventory transactions impacting the GL. My name is Luke Neal. I'm a solutions executive here at Bales. I cover the Northeast for our client base in healthcare, as well as manufacturing and retail. If for those of you joining today that aren't familiar with who Bales is, we were founded by Jamie Bales in 1995. We've been a part of the Infor partner community since 1997. All of our roots are based in Infor's human capital management, finance, supply chain, and all the technology components around those platforms. We really only specialize in the Infor suite of products. The average tenure of our consultants is about 16 plus years. And in 2021, we became part of Nordic Consulting, which is a firm that specializes in EHR implementations and managed services. So at this time, I'll turn it over to Kacie. She's the star of the show today to start her presentation.
Awesome. Thank you, Luke. Thank you for that introduction. Hello, everybody, and happy Friday. My name is Kacie Burge. I am a supply chain solutions architect here at Bales, and I am accompanied by Tani Benvenuti, who is our finance practice manager, and she is going to keep me honest on this call and make sure I'm not going rogue here with the assumptions I make in regards to the finance side of the business. So that's why I need her to keep me honest. But let's see.
Yep, be glad to do that for you.
Right? Unfortunately, that's probably her part-time job in handling me. So no, I'm just kidding.
No.
So we have this disclaimer slide. If you have been to our Informative Friday presentations before, this is nothing new. It just states that this material is in reference to the Infor FSM product. It is strictly for informational purposes. If you would like to contact Bales to discuss these solutions specific to your organization, please let us know, and we'd be happy to discuss that. And I think we actually end this presentation with a little coffee with consultants opportunity out there if that is something that you might be interested in. So with further ado, and actually a good segue is that this topic actually came about from a wonderful client that we had. They brought this concern or issue to us, basically saying that they have difficulty reconciling their inventory account to the global ledger. They were actually able to identify pretty well those transactions that were causing this issue, but why? Like, why was it happening, right? And so this topic, we tailored this presentation to the audience at large, right? Because I think several clients that are either on FSM right now or considering upgrading to FSM could benefit from this topic, from understanding where the setup begins and making sure your foundation is solid to how processing inventory transactions affects the GL. And also, what role do people play, right? How does finance and supply chain work together to make sure this process is hopefully pretty streamlined, so that you don't have those variances right at the end of the month or that they're minimal? So we're very excited to share this presentation with you all, and hopes that you can help streamline your processes in the future. And I know we have this client. I saw some representatives on the call, so I appreciate you all for helping us develop this presentation and bringing this topic to light, because I think you're going to help benefit a lot of other clients on this call. So what are we going to do today? We're first going to start by talking about all the different setup pieces that are needed even before you start creating an inventory transaction. Where does the setup have to be done first? This is where we have both finance and supply chain usually sitting in a room or virtually, right, sitting in a meeting room to discuss where from a supply chain perspective our setup is done, from where the accounting units are or cost centers and our account needs. Where does all of this live? And you're gonna see in just a second. And if you're familiar with FSM, it lives in a lot of different places. Okay. Then we're gonna go into understanding why these variances even happen, all the examples we've gathered from clients in our experience. And then I'm sure if you guys in the chat, please feel free to tell us your other experiences of how you've seen these variants happen. So I'm sure we can come up with a lot more. Then we're going to go into reviewing exactly what are inventory transactions. There's several different types of inventory transactions. We're going to cover all of those. And I think finance is going to be super excited. I have a whole bunch of T accounts, some illustrations to show the debits and credits. So that was pretty fun to put together. So Donnie, I'll have to make sure I have this correct.
Somebody else is doing T accounts besides the finance person.
Right? I was like, trust me, it was interesting. I'm like, wait, what is this again? What does the plus sign mean? No. I think I figured it out, I hope. And then lastly, I'm just going to do a little plug for the Infor Process Intelligence. And this is actually really cool because this week, I don't know if you all had a chance to attend. There was on a Wednesday, I think it was Wednesday, Infor did an awesome call explaining and showing the end-to-end business process flows provided in Inventory Intelligence, which is formerly called Implementation Accelerator. Right. So I want to show you that because what we're going over today is ultimately inventory transactions, and it is a piece to the big puzzle of the plan to inventory business process flow. So I just kind of want to show you that, and I think it's a good follow-up from the call on Wednesday. Okay, so with that, let's get started. Okay. So where we talked about setup, where is all this default distribution and accounting information coming from? As you perform supply chain transactions, okay? And as you can see from this list, there are several places throughout the system where we, from a supply chain perspective, have to set up this information. So first is our match company setup. Then we have our inventory locations. We have inventory location account groups, which is our mini chart of accounts. We have inventory reason codes. And then we just have direct entry into transactions. We can define accounts and setup. A couple that aren't listed here that I probably should have put on here. We're not going to talk about them in this presentation, but if you're familiar with FSM, you know that you can do this, are your contract lines. You can code expense accounts directly to special items on contract, right? That's going to help with the overall process flow for requesters if they're requesting special items or POs, right? You can default those distributions automatically for them. This also comes from the item master as well. And so you can code the expense account directly onto your item master record. And the other one that I just want to hit on, just because you might want to just go double check your setup, and I might have a slide on this shortly, is your add-on charges or add-on costs. You can, based off of if it's non-landed or non-spread, you can default your distributions on an AOC. So, right, like when I say there's lots of places, there are lots of places. So the first place we like to start is looking at your setup and seeing if we can find any outliers or recommendations immediately off the bat with your setup that could be causing any issues. So it's very important that we have both your finance and supply chain teams together, regardless if you're a new customer or you're new to Infor. So that you're determining what you need from a finance perspective in your build. Are you going to use an existing account, right? Or is this an opportunity to create a new account, right? And you have to get that sign off from finance when we're doing this. So I have an example, or I guess I have a scenario. Does this sound familiar to anybody? Hey, Tawny, I am building a new inventory location account group, okay? I need to know what account you want me to put in the item cost variance suspense account field, okay? Can you just give me what I should put there? And Tawny's response might sound like, well, what does it do? What is the account used for? What transactions cause it to get hit? How or why does it get hit, right? And you respond with, I'm not sure. I just know it's required and I need you to give me the number to put in there, right? I am sure that has never happened to anybody on this call, right? But if it does, I would think it's a supply chain's responsibility to be able to explain to the finance team what transactions cause that account to be hit, okay? They need to know, could this be a temporary holding account? This is going to help them determine if they should be using an existing account or if they need to create a new one, right? And I will say Infor does a wonderful job. If you go out on docs.infor, they do, I double check this, for match company inventory locations, inventory location account groups, they have a blurb of what that account is used for. Okay, so that is a very good starting point if you are not certain of what that field does. Infor does provide the documentation. And in this presentation, I think it would take me 2 hours alone to go through each of those and give you examples of the processing that would happen. But that's a good starting point right there, is docs.infor to find that out. But part of our Bales implementation methodology is at the beginning of our projects, we start hashing out this setup, right? And we start testing it to make sure that as we perform these inventory transactions, they are hitting the GL correctly. Okay, so this is, definitely involved in our day one setup discussions.
And a joint effort with finance.
Yes.
We love to work together with our supply chain team.
Oh, I love that. I don't know who said that, but
That's
you.
me, Tawny.
Oh, Tawny. Hey, Tawny. Sorry. Sorry. Thank you. Exactly. And we work at Bales. We work very closely together with our finance counterparts. Okay, so, all right, let's keep going. Okay, we're gonna take a look. So this is just a screenshot, right? You're probably pretty familiar with your match company. It's sometimes arguable that matching is owned, right, by finance. But like I said, we don't treat it that way at Bales. We truly believe matching cannot exist without purchasing and AP. Okay, so we think it's very important that both of these areas are involved, at least in the preliminary setup discussion, so that you know what the flags are in the match company. You understand the tolerances that are being put in place, right? Because those affect buyers' messaging, right? If there's certain tolerances that you weren't aware of and you are getting more or less messages than you kind of expect, it all comes back to the setup. So we like for both the teams to just at least get an overview of your rule groups and your tables, right? And then obviously right here, this account section. So we covered this right at the beginning. So if I'm looking at match company setup, I would be looking, if I was, reviewing a client's data, I'd be looking for unique accounts for pretty much all 10 setups. I'm sorry, is there a question? Oh, sorry. In that, and I want to make sure that these accounts, right? So if I, right here, this list right here, and I know finance dimensions can be different, right? But for us, this is our account field. We're looking for 10 unique setups here, and that they are not used in anywhere else in your setup of your organization. Okay. The one exception to this, right? And a client may have this, the match write-off right here. So this account and the inventory receipt archival, this guy right here, we've seen that this can be the same for some clients, and we would think that that would be okay. Based off of, I think the job on the supply chain side of the report on the supply chain side is receipt archive or open receipt archive. Depending on the selections that you make when you run that report, it's either going to write off or archive whatever receipts are included in that, and it looks to these accounts. So if it doesn't make a difference to you, the difference between writing off and archiving a receipt, then you can have those actually be the same account. But for the most part, we would say all these, we'd want to see them unique. Okay. The next thing, and right down here at the bottom, the underbill write-up is not required setup piece. I think it's mostly used in detail match, if I'm not mistaken, but that is the one that doesn't have to, you're not required to fill that out. Okay. So what are some things we see at Bales? So when we're talking with a client, it really, unfortunately, it doesn't fail that after we explain the processing that happens to hit these accounts, they say, well, we just don't do that in our organization. We're never going to perform that type of process. So we're going to use the same account in several places. So we'll see the same account listed 5 or 6 times here. And then it also doesn't fail that after go live, they have reconciliation issues because they chose to use the same account. They have a lot more hitting there than they thought. So processes that they didn't think would happen are happening, and they have to end up updating their setup anyway. Okay. So again, if you're an existing client or you're looking to upgrade to FSM, keep that into consideration that if you want to save yourself some research hours, right? If you're trying to figure out why discrepancies are happening, using these unique accounts will help pinpoint those specific transactions if you don't have as much hitting there. Okay. Next is inventory location. So you'll see there's, 5 setup account needs in regards to an inventory location. Again, it's just important to understand what transactions cause these accounts to be hit and which ones should be maybe just a temporary holding account. So as an example, our inspection hold account. So what's listed right here? This is a temporary holding account, right? It tracks inventory items that were received, but waiting on an inspection, and then gets credited when the inspection is complete, okay? So I'm not sure if this is the correct finance terminology, but like it's a pass-through account, right? It goes in and out. Nothing should be sitting there for a long time. If something is sitting there, then that to me is a red flag. Why? Why is something stuck kind of in there and it's not getting cleared out each month, okay? Inventory location account group. So these are our little mini chart of accounts. Something we've seen, with clients with this setup, the inventory, okay, right here, the inventory, the receipt, and the adjustment account. These have been the same, okay, but the only setup to allow these to be the same is if it is for a consignment item in your inventory, okay, or it's the consignment inventory account. If you use this setup for non-consignment items and you perform a transaction like an adjustment, it's going to adjust your physical inventory, right? Which in turn adjusts your inventory valuation, but you're not impacting the GL. Okay, so we're not touching the GL and adjusting the inventory account because it's a wash to that account. Okay. So the only time you really don't obviously want to impact the GL is for consignment items. So go take a look. If you do have consignment, make sure the inventory receipt and adjustment account are all the same. And I think the adjustment is actually the optional one, if I'm not mistaken, but we like to see all 3 of those the same. And just confirm with your other inventory location account groups that those are unique, okay, and that they are not all the same. So we've also seen clients with lots of inventory location account groups, right? So if you've got 30 different types of expenses in your inventory, clients used to have to build 30 types of inventory location account groups for each expense. There was an update, and I'm not sure when, I think it was several years ago, but there was an update to now include the issue account in your item master, okay? So what that means is we would have it set up like my screen shows. So we would be leaving the accounting unit blank and the account blank, and we'd allow those to default from the system in other places. Obviously the item master for your account and probably your requesting location for your accounting unit, okay? So we can consolidate basically with that update, we can consolidate 30 down to just maybe only 2, one for all type of expense items and then one for consignment with that slight change in the setup, okay? And why I bring this up, you can, right? You can continue to have 30, 40, however many types of expenses you have. But you can see, right, when you have to build one of these out, and hopefully a lot of people are probably using Spreadsheet Designer, but imagine how easy, I guess, it would be to select the wrong setup, right? To accidentally select a different cost center or account that looks similar, right, when you're building these. There's just a lot of fields that have to be filled out when you build an inventory location account group. So I would prefer just to have to monitor 2 of these, right, per inventory location rather than 30 per inventory location, and that can get pretty large pretty fast, right? So just something to consider in your setups at your organization. All right, next is inventory reason codes. So inventory reason codes, they're going to update the offsetting accounting information, excuse me, that would automatically default from your system setups. So I am going to say, I will send a Starbucks gift card to the first person that opens up this this enhancement request, because I personally would love to see where these inventory reason codes are not tied to distribution information, but are strictly just informational. There is, of course, nothing wrong with the reason that the codes are the way they are now, right? It's very helpful for explaining the justification of a certain transaction or why you're creating one manually, right? But what happens here is you cannot save an inventory reason code without filling out some type of accounting information, okay? So again, I would love to see an enhancement request where it's just a code with no distributions, or it's optional, right? That would be nice. So ping me if you open it up. I'm sending you a gift card, and then I will vote on it. Okay, we'll try to get everybody else to vote on it. But what I want to bring up here, because the setup is the way it is, and that's okay too, just to make sure, go do an audit and make sure your account, that this is not the inventory account. That's the big key here, right? Make sure none of these are coded directly to the inventory account. Okay, so go take a look at your own system and see and confirm that that is correct. Okay. All right. So we think it's very important to understand how average cost is getting calculated in FSM, because that's what's driving the cost of the inventory transaction and what's getting sent to the GL. Okay. And I stole this example from Jerry, who's on the call, right? She had this wonderful example with the Diet Coke, and I just loved it so much. I wanted to use it here. And I am also obsessed with Diet Coke. So what I'm trying to illustrate here is that any receipt transaction that's adding stock on hand to inventory, whether that's a purchase order receipt, an inventory receipt, a negative inventory issue, requisition return, right? These are all transactions that increase stock on hand.
Mine was horrible too.
The bun fell apart.
My bun was.
I took 2 buns.
That hurt somebody. Okay. That's going to affect your average cost, okay? And your period end valuation is based off average cost, right? So that's where it's coming from. So how is it calculated? And I am just going to do I think is a pretty cute, simple example. Feel free to sub your own beverage of choice into this, but we're going to say I have 10 Diet Cokes sitting in my refrigerator at $1 a piece, right? Quantity of 10, cost of $1. My stock on hand in my refrigerator is 10. My average cost is $1, okay? My husband goes to the store and he thinks we're running low, so he goes to purchase 10 more, and thank you, inflation, they went up to $2 a piece. And don't ask me why he didn't buy a case. I don't know. He bought 10. Okay, that's all that was there on the shelf. So he bought 10. So the system is going to recalculate the average cost of this inventory in my fridge. So I bring in 10 more at $2. I have a stock on hand, a total of 20, and my average cost got recalculated to $1.50. Okay. And then let's say the next day, oh my goodness, I had a headache. I really had a craving for Diet Coke. I now take 2 out of my fridge and I drink them up. When I do that, now I'm left with 18 units. Okay. But my average cost doesn't change. Okay. That was not an increasing transaction. It did not affect my average cost. So it stayed at $1.50. And then the next day, I just happened to be at Kroger. I saw that the price went back down to $1. There was 5. I went and snatched them up. So I purchased 5 more at $1. My new stock on hand went to 23, and my average cost dipped down to 139. Okay. And this is a fun, I think, illustration to show this, but I have been on many calls with Tani, and we've actually done this exact thing with selecting someone's item in an item location, okay? And we look at all the transactions that happen to that item during a particular month, tracking the average cost and looking to see what was sent to the GL, right? To understand where the variance occurred, okay? So that's why I bring this up, because this just hopefully proves out and shows that the average cost is getting calculated when increasing transactions happen. You can ignore the quote unquote issues, right? And this is exactly what N4 is doing in the background, okay? So we know how cost is getting calculated, but okay, we haven't talked about why do these variances exist. So when Tani and I were coming up with this, I started the conversation with there is many ways, okay, that these can get off balance. The variance between my inventory valuation or my period end valuation and the GL, like lots, Tani. And she came back with, no, I'm not buying that. There's one that I can tell you, right? That's the only one I'm gonna sign off on. And actually, after we talked through all these and she saw where I was coming from and I saw where she was coming from, we were like, okay, we can get each other's sides, right? We understand. And we came up with this list. And so we want to just say, of course, we have to assume the N4 programs are calculating properly, right? So what I showed you, that average cost example, that's happening in N4 properly. The math is all correct. We haven't found a reason when it's not. and it's all going to the GL, correct, right? So it's something that is happening really with our processing that is causing the issue. And what could that be? So one, and this is Tawny said, this is the only valid reason I'm going to tell you that there should ever be a difference, right? And it's rounding. So our inventory valuation or period end valuation, depending on when you're running this report, is based off your item group setup. So anybody that's familiar with the item group, we have the ability to determine how many decimals we want to go out. 2, 3, 4, I think it might go up to 8. I'm not certain, but we have that ability to determine that. But the global ledger only goes out to 2.
Two. That's it.
Oh,
two.
you do? You get 2. I'm sorry. I was like, I thought you said we do 2. I was like, wait, what?
No,
when did
we
that
get
happen?
2. Only 2.
2. They get 2. They don't get a choice. Okay. So what does that mean? Well, obviously there is going to be a variance. If you say you're going out 6 decimals and from a supply chain perspective, the GL is going out to 2, if you've got a large volume of items, right? I mean, this could be small variances. This could be big, depending on how many items this affects, right? So just be aware there could be rounding issues, and maybe you have that determined that you don't look at certain variances under a certain amount because you're accounting for those, okay? But definitely note rounding issues would cause a variance and is a valid reason, okay? Other reasons variances exist. This goes back to setup. So the inventory account that I pointed out is put places that it shouldn't be. Okay, so the inventory account, if you go to review your setup, should only be the inventory account in the inventory location account group. Okay, so sometimes at go live during inventory conversions, we may go and temporarily change the receipt account to be the inventory account because we are going to convert your stock on hand through a receipt transaction. Okay, so that can happen. And if we don't forget to change that back, then that's obviously going to cause us problems as soon as we start processing. Okay, so if you find that your period end valuation is higher than the GL, okay, the inventory account in the GL, setup is more than likely going to be your culprit because we are creating transactions on the supply chain side that are, boom, 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 increasing our stock on hand, but it's washing out on the GL, right? So we're coding something to the inventory account that is a wash, okay? So that it's usually, you can really kind of pinpoint its setup. So go check out all those fabulous setup pieces we looked at. One thing to also look at, are there transactions other than the ICPO or RQ codes or subsystem identifiers that are hitting your inventory account? Okay, that is a quick, easy way to be like, oh, something's wrong, right? If you've got other system codes hitting the inventory account at the end of the month, that's a problem. And even codes of ICPO and RQ cannot be correct, okay? But just a quick, easy check to see if something else is hitting there. You'll know that somebody's used your inventory account elsewhere. Another reason we've seen a variance is shipments that are finished. They grab a posting date, right? If this shipment was done in a prior month and it was finished, okay, a posting date automatically gets populated into that field, okay? Then the next step, if you're familiar with supply chain, we hit the release action, okay? When we do that on a shipment, it creates the inventory transaction on the supply chain side, okay? And that's what impacts the inventory valuation, okay? And the post date cannot be touched. Once we release it, that post date is locked in, it's grayed out, and you can't touch it, okay? That's the date that's going to show in the GL. So your GL is going to be properly stated, but your period end valuation is still going to show those items, quote unquote, in inventory, okay? Because we didn't release that transaction. So what ultimately we want to make sure any shipments that are moved or should be moved from finished to closed, and that happens with the release action on that, that shipment form, okay? There is a job, this is nice, there is a job called warehouse shipment release. You'll find it under the warehouse clerk or warehouse processing. You can set this up as a job. We recommend that you have this set up as a job to run every night to catch, right? If you're doing processing shipments or entering shipping feedback manually, it's a good idea because it is a 2-step process to maybe have this job running nightly so it catches any ones that didn't move from finished to closed. Okay, this will automatically release them. So definitely recommend taking a look at that job, and that will help with some preventing that error from happening. Okay. Another reason variances exist, and this is more broad, but it's having certain transactions created from subsystems. Those can use different dates. So we know that GL, like there's post dates with GL compared to transaction dates for supply chain. It's when things are released. There's update dates versus, transaction dates, right? There's lots of dates used in lots of different subsystems, and they are called different things. Okay. So ultimately, this bullet point is to say, our goal would be that where applicable, please start and finish transactions on the same date. Okay. Unreleased inventory transactions, unreleased receipts. We shouldn't, at the end of the day, we should make sure all those are in a release status, right? Because you could get days later, somebody's not going to remember why they started to create that inventory transaction, right? And why they, did they get pulled away? They didn't finish it, right? So it's a good rule of thumb to have those completed in the same day. And now, obviously, warehouse shipment, right? You shouldn't have any shipment sitting in a finished status. You want those either in printed or closed, okay? Another thing just to think about, when you are reconciling the month end, right? Some clients were used to using the inventory valuation, but we want to make sure that the period end valuation is what is a more appropriate document at the end of the month. And the reason being is because if you don't close, if you choose to close on the first business day of the month, okay, and let's say the month ended on Saturday, there's going to be transactions, I'm sure, that happened Saturday, Sunday, which means if you try to run the period end valuation, it's not going to tie to the GL, right? Because that processing happened on Saturday and Sunday. If I'm running that report on Monday, it's going to include those transactions, but the GL is not, okay? So just consider, just make sure, have somebody double check, whoever runs your month end or period end close, that they are using the period end valuation as the comparison and not necessarily the inventory valuation. The inventory valuation is great to run throughout the month, okay? But the period end is what should be used at the end. All right, and there's more. Oh goodness, you thought I was done. I'm not. There's more reasons. And this is where I was really coming from. This is list. I was like, oh my goodness, this is, I know I can make it not tie because of this stuff. So users posting directly to the inventory account. Okay, this can happen a lot of different ways, right? And we've identified some here. I'm sure we didn't cover even all of them, but these are the ones we are most obvious, the ones we see that are unfortunately happen the most. And first is AP coding a basic invoice to the inventory account. Okay, just make sure, right, that's not happening. Probably the bigger one though is that the credit memo, if AP gets a credit memo in their hands and they're keying that in, that's getting coded to the inventory account because, right, they do the research and they look at the original PO line distributions. That's where the original PO line distributions were charged. Wouldn't I go ahead and put the credit there? This is usually a big culprit. And it must be discussed, right, with the organization. Where should they code that? And sometimes I think we see them code it to the inventory adjustment account. But we're not creating the offsetting transaction from the supply chain side, right? So if you're crediting inventory through, this credit memo, we didn't do that on the inventory side, right? There's nothing that's going to show in our period end valuation to compare that to, right? So that's why we want to avoid invoices or credit memos. Also on an invoice, right, your add-on charges. So yeah, I thought I talked about this again. So add-on charges getting added at the header. So these are the non-spread or non-landed, right? These are the ones where we're hitting a specific account when we add this AOC. Just make sure that you don't have any of those set up as your inventory account, okay? Because obviously that means we're hitting it and we do not have an offsetting inventory transaction to map that to. So we're not going to be affecting the inventory valuation. Another example is potentially avoiding manual journal entries, coding directly to the inventory account. Of course, the exception here, right, is when you're trying to make a balance, right? You're doing your reconciliation and you need to create that manual journal entry to balance your inventory account, right? Of course, obviously you have to code there to fix that, but any other reason, throughout the month, just you don't want to do that because it'll cause us those variances. So from a supply chain perspective, right? No, we're not going to get off the hook here. If you thought that only AP could do this or finance could do this. No. Supply chain, right? We can override the offset account on manual transactions in lots of different places and accidentally put it to the inventory account. And that's what we're going to go through in just a second. All those inventory transactions that exist out of FSM, where is the ability to do that? Through a reason code or through direct entry? And there's a lot, okay? So if we enter the inventory account in a manual transaction, okay, it's going to wash out on the GL side, and we're not going to create that GL impact, okay? So that's why we obviously do not do that. Another thing to consider when we're building requisitions or POs, right? A requester or a buyer. If it's for a special item, right? We want to make sure nobody is putting the inventory account into that, okay? And just to note, an option out there for you. If you want to find to see if you're doing this within your own organization, I would go and query out your PO line distributions for any non-inventory items and check and see if anything was accidentally coded to the inventory account. That's a good audit right there to see. And that's just easy to do now, especially if you have Spreadsheet Designer. You could just query that out pretty quick and search for those inventory accounts and see if anything hit there. Infor, FSM, the system does not know this inventory account is so special to us and unique, right? It does not know people spend a lot of time to make sure our valuations tied to the GL account, right? So that's why by default, it allows people to do this. It allows you to put the inventory account in certain fields, okay? It doesn't know not to. So you can control this through system restrictions, and I think that kind of lives on the finance side, and that's determining the relationship, right, of allowing certain accounts and cost centers to be a combination, right, in the distributions. So there could be some system restrictions you could do that way to prevent this from happening. Also look at your organization and see, do you need to do some global configurations to prevent these things from happening, right? Should we hide these fields from users? Should we gray them out for users, right? So that we limit the ability that there is this manual intervention, okay? All right, so what are these manual transactions? So I wanted, and I'm going to go into the system real quick. I know this presentation, honestly, I'm so sorry. It's a lot of talking. I usually love to do some demos and break it up, but I think this presentation just lends itself to a lot of information. But I wanted to look at what is the entire list of inventory transactions that can possibly be done within FSM, right? To start coming up with which ones do what, where does it hit, and actually running these through to see where the accounts come from. So if I am under the inventory manager, and I'm just going to share with everybody how I even came up with this list. If you go to inventory transactions, and I went to the all transactions, and if you filter by the document type, this is where I got my list from. So look at how many different types of inventory transactions there are, right? And each one of these has accounting information, or there's distributions that are going to happen because they're performed, all right? So again, this is where I got the list from. So even if you cross-reference this PowerPoint to this list, this is where I started it from. And I took this list and I'm like, I want to break it up. Which ones are manual, I guess considered manual transactions, and which ones are system generated transactions? So let me get back to the PowerPoint. All right, so we're going to start with manual. So I broke it up and we're going to review the manual transactions that can be created by a user compared to the system processing ones, okay? So I'm sure if you work in the supply chain side, you're very familiar with these adjustments, right? Adjustments, we can adjust inventory up or down. I can do that manually. Inventory issues, I can do a manual inventory issue up or down, right? That's a pretty common one. Inventory receipts, and just remember, this is non-PO, okay? This is not a PO receipt. This is a manual inventory receipt. And this is not used very often, but where it is used is if you're loading your initial consignment inventory, or if you're loading your initial stock on hand at go live, okay? Those are usually the two main reasons I would ever see that type of transaction selected. We have inventory transfer, right? And so there are two types of transfers, direct transfers and in transit. This is moving inventory from one inventory location to another inventory location. So N4 provides you two opportunities. A direct transfer is creates two documents, okay? The first one is an inventory transfer. The second one is called a receiving transfer. As soon as the release button happens, it's going to decrement inventory in the from location and increase stock on hand immediately in the to location, okay? And it creates both these transactions in the background automatically, okay? The difference is an in-transit transfer where the first document, which is still the inventory transfer, it's going to decrement your stock on hand with the release function, okay? And then it creates an in-transit receiving document that doesn't immediately decrement it doesn't immediately increase your stock on hand at your second location until that transaction is released. So when a client's trying to decide, well, which one makes sense for me? Do I want both of these to happen at once, or do I, want some control over when that inventory increases in my second location? And we kind of go with the 1-day rule, right? Can this inventory move quickly within 1 day to that second location? Or is it a 3 or 4? Is it across the state thing, right? Which is going to take some time. If it's more than 24 hours, we'd recommend doing the in-transit transfer option, okay? We also have here the inventory return, and I call it new, okay? I'm not sure how long I should be calling it new because I think it's been around since June or July of last year. So I'm sure, I guess when it's coming up, maybe for a year, I'll stop calling it new. But this is how you can process, or a new process, to create a return from the initial issue transaction, which is pretty cool. It's pretty cool functionality. But it is manual, okay? And then lastly, in my list of manual transactions are cost adjustments. So believe it or not, you can create manual cost adjustments, but it's a very specific scenario. It has to be created from a manual inventory transaction that initially increased stock on hand, okay? And that the cost adjustments are updated when that record is changed, okay? So you can only make cost adjustments to item quantities also that are currently in stock, okay? So I don't see them used very often, but it can be done, okay? All right, let's compare that to the system-generated transactions. So again, from that same list of inventory transactions, which one just happened because of processing that we've done, okay? First one is a requisition return, right? We can create a requisition return. It's going to automatically generate this inventory transaction in the background for us. Purchase order receipts, of course, that's going to create an inventory transaction. Vendor returns create inventory transactions in the background. If you're performing a cycle count or a full physical inventory, when you post those differences or you're ready to say, yep, we're okay with whatever we're adding or taking out, those are automatically created in the background called physical inventory adjustment transactions, okay? I've got cost adjustments on this list, and you're like, well, wait a second, you just told me those were on the manual list. It can also happen from system-generated transactions, and the answer is yes. So if a buyer is answering a cost message, okay, and based off the way they answer that message, it's going to create a cost adjustment in the background automatically to adjust your inventory. And same thing, you don't see this one, right? But if we go back to our match company setup, we determine tolerances. So if there is a variance and it is within tolerances, it will also create the cost adjustment automatically in the background. Okay. And lastly is inspection. So when you're performing inspections, when you accept an inspected item, it's going to create inventory transactions in the background. When you reject an inspection, it can also create an inventory transaction in the background. So if you're performing an inspection and you decide you're going to return that item, you're going to reject it, I guess, when you open up that line, there's an option there called write-off. And you can select write-off rather than vendor return as basically the output, okay? And if you adjust that from vendor return to write-off, this is what's going to create the inventory transaction labeled rejected item inspection. But by default, if you're performing an inspection, it is already flagged as vendor return. So you do have to go in and manually change that to write-off for you to see this rejected inspection. Okay. One more that's on the list, and I just wanted to show it to you because I didn't want you to think that I forgot about it, it's on the list, and that's a bin transfer. And we're talking about transferring one item to another bin in the same location. Okay, so there's no GL impact. So it is an inventory transaction, however, no GL impact. It happens. Okay. All right, so I'm going to try to go through these quickly because I'm looking at the time and I only have 15 minutes and I want to make sure we get to any questions. And we have some ending slides, but this is where I was super excited to take a stab at building some T accounts. So I'm going to go through all those inventory transactions that I just went over, right? I'm going to show you, where did that account come from, right? Where in my setup did it pull that out of the system, right? And then what I also identify to you is, can I override that through a reason code, or can I override that through just manual entry directly on that transaction? Okay, so you guys can see where these could occur because we can override the default information from our setup. So if we spend all this time, right, our setup is perfect. We've done all this work. We know our setup is good, right? Now we need to see, well, where could we give the ability, or where could someone have the ability to maybe adjust that, unfortunately, through a transaction, okay? So first one is the, where does the account come from? The adjustment account. If I'm performing an inventory adjustment transaction, okay, it's going to pull that field from the inventory location account group, okay? But if I wanted, I could override that through a reason code if I select it, or I could override directly on that transaction manual entry. There's like offsetting account fields that I could do. So there is two opportunities here to override. But what happens when I do that inventory adjustment, right? I can do an increase or a decrease. If I increase my stock on hand, I'm going to be debiting my inventory account and crediting my adjustment account. If I am doing an inventory adjustment to decrease my stock on hand, I will be crediting my inventory account and debiting my adjustment account. Okay. Right. Issue account. So if I'm performing an inventory issue, okay, it can pull that account from one or two places, and this goes back to based off your setup. It can pull from the item master field if you have that issue account filled out, or it can come from your inventory location account group if you chose to hard code it into there, okay? Same opportunities for overriding though. I can override through the inventory reason code or manual entry to the offset account. But ultimately what's happening here is I'm crediting my inventory and debiting my issue account. And I probably should have put two boxes on here. I realize you can do a negative inventory issue, right? That's returning the goods back to inventory for someone, right? So if you did a negative inventory issue, we're just doing the reverse. We debit the inventory account, credit the issue account, okay? So sorry, I should have had both of those on there. All right, non-PO receipt, okay, an inventory receipt. It's going to pull that receipt account from our inventory location account group. We have two abilities to override that by default. When we do an inventory receipt, we're debiting inventory and crediting receipts, okay? And again, just make sure that the receipts do not have the inventory account coded to them, okay? So go to your inventory location account group, make sure that receipt account is not the inventory account. Our transfers, okay, so I said when we do, whether or not it's a direct or an in-transit transfer, it's creating two transactions in the background, which I have here at the bottom of the screen. So it is coming from the in-transit account though. So if you go to your inventory location account group, it is looking at that in-transit account to pull. And so if at the from location, when you're creating this transaction, it's crediting your inventory, debiting your in-transit account. The second document that gets created at your to location is debiting your inventory and crediting the in-transit account. But I wanted to see, ultimately, overall, what's happening, right? This is really what I care about. And I am crediting my from inventory and debiting my to, okay? And just remember, these two transactions happen immediately upon the release action, okay? And the difference is compared to our in-transit transfer, okay? So overall, what's happening in the background is the same as a direct transfer. Okay, we're still using the same account here. It's still the in-transit account, but this second document doesn't get automatically released until somebody manually releases it. Okay, so the second transaction won't happen. So just look at that, right? Look and see if you have any open in-transit receivings potentially at the end of the month, right? When you're closing. So, but same credit to the from inventory and debit to the to inventory when this is happening. All right, the inventory return process that was introduced recently, okay? The distributions are coming from the requisition line or that inventory issue document, that originating document. However, we can still override the credit account and we can override through a reason code, okay? But what's happening when we do an inventory return? We're debiting inventory and crediting the issue account. All right, sorry guys, I'm trying to go through these a little bit fast because of our time. Cost adjustments. So cost adjustments are also coming from the distributions are coming from the original transaction, okay? So the offsetting account information, if it was an adjustment, right? If that was the original document, it's going to go to the adjustment account. If it was a receipt, it's going to go to the receipt account, okay? So that's why I have here, it's the original distributions. It all depends on what the originating document was, okay? Keep that in mind. All right, requisition return. This is now, if you see, we're kind of going into the system process, or excuse me, the automated processing that happens, the transactions that are created from system processing, this requisition return, right? We have no ability to override. When we do the requisition, the return from that requisition line, it creates this inventory type transaction and we don't have the ability to override it. Our first time we've seen no overriding abilities, okay? And again, we're debiting inventory and crediting that issue account, okay? Purchase order receipt. This has the ability to hit 2 accounts, okay? So I just want to make sure you guys are aware, especially if you kind of grab this, a copy of this PowerPoint deck to reference. A PO receipt can go to the R&I account. I call it the R&I account. I think it's technically the PO receipt accrual account, or it can go to the MNR account. And this is all depending on if the invoice has been entered, okay, by the time we receive the PO, okay? Regardless, both of those setups are under your match company, okay? We cannot override the distributions during the PO receiving process, okay? So what's going to happen is we're going to debit inventory and credit one of those 2 accounts. And here I just have the PO receipt accrual, the R&I account. A vendor return. It's going to hit the return suspense account, and that comes from your inventory location setup. No overrides can be done. Physical inventory adjustments, right? When you're doing a cycle count or a full physical inventory, depending on if you're increasing or decreasing stock on hand when you're ready to post those differences, this is coming from your inventory location account group. You do have the ability to override through a reason code though, right before you perform post those changes. It's not required, but the field is available and does look to your inventory reason codes for that. Cost adjustments, whether or not this was from a buyer message that got answered or it was just within tolerances, the distributions come from your match company setup or your inventory location account group. We do not have the ability to override here, okay? So the offset account, if stock is available, okay? So this is another case where there's potentially 2 different, that's why I say it can come from match company or inventory location account group. If there's stock on hand, okay, so it may change whether or not there is stock on hand. If there is stock on hand, it's going to go to the item cost variance expense account. If there isn't stock on hand, it goes to the cost variance account. So very similar in names, but definitely 2 different, in 2 different areas and 2 different accounts. Okay, and then if it's within tolerances, it also posts this the exact same way. Okay, inspections, right? This comes from your inventory location setup, right? And we said this is accepted inspections. Obviously, it's going to debit inventory and credit the inspection hold account. Rejected inspection, for you to actually create this rejected inspection, you have to go in there and select write off, okay? That's how it knows to basically debit the scrap account at this point and credit your inspection hold account, okay? All right, guys, almost done. Okay, so what can you do moving forward? I just threw a lot of information at you. So to recap, right? Finance. We'd love for you to try just to avoid posting directly to the inventory account, which I'm sure you guys know, right? That can happen through a basic invoice, through a credit memo, or through journal entries, with the exception if that journal entry is meant to reconcile the account, right? So avoiding coding directly to the inventory in those ways. Supply chain. If you're creating new inventory locations, new reason codes, new inventory location account groups, just double check with finance. Make sure you have somebody else to sign off that this is getting set up correctly, right? Also, we saw, I mean, I know I kind of flew through that, but manual transactions, there is so many ways to override what we've set up in our system through the reason code or directly through coding there, right? The fields are available by default. So, you know, the more people you have involved with the ability to create manual transactions, the more eyes you need to have on it, right? And obviously a lot of training to make sure that that's not happening. People are not doing the overrides unless you decide to put in some configurations, which definitely is a good idea in some cases to hide those fields. And then really completing processing in the proper period, right? And the biggest example we had here was that warehouse shipment, just making sure that those are complete, definitely before period end close, right? But even on a daily, weekly basis, some of these lists should be monitored, okay? And I don't have time to go there now because I know we only have 4 minutes, but just make sure if you didn't see that Wednesday presentation, it was really good just to explain the Infor process intelligence piece on Infor Concierge. And the reason I bring it up is because inventory transactions, again, are a piece to that planned inventory puzzle, right? We fit in there, and there's awesome process flows that are explained with Infor. So just wanted to give that plug. Okay. Oh my goodness. Okay. Questions. Is there any questions?
Kacie, there is one question that's in the chat, and I was going to look it up. It is, what business class should one use to report on or for the PO receipt accruals? So I was going to check on that and see if we can get back to Godwin later in regards to that one. The other ones, Jean O'Neill, many thanks from Infor, posted that document on the account groups that you had referenced, I believe, earlier.
Oh,
and
thank
so,
you.
and I know you went over too. So Laura has posted that in the chat, but there were some challenges for some to be able to actually access it. So we forwarded it to the 3 who pointed it out, but we'll go ahead and make sure we make it available to everyone who attended. So thank you, Jean, and thank you, Laura. So it's just that one question. So unless you know off the top of your head, which I needed to look it up, we can turn it over to Luke.
Yeah, I have to look that up. And then I know Godwin. So Godwin, I'll get back to you. Okay, Obi. Right.
Well, thank you, Kacie. What a great presentation. Wanted just to remind everybody that we have one more Informative Friday session scheduled for next Friday. What to expect when moving from S3 to the cloud with regards to HR talent. If you'd like to be registered for that one, go ahead and email Molly Velasco at balesllc.com and she'll help you get registered. And then we have one other offering as well. Oh, I'm sorry, Informative Fridays. So next week will be our last one until May. So sad faces, you'll have to wait until May to see us again. But we're looking forward to those sessions in May. We're still offering the Coffee with Consultants. It's a 30 minutes window that you can schedule with us. You can email Molly as well to get that set up, but you can chat with any of our consultants about any topic that you'd like, whether that's moving to cloud or any questions with your current system. We're happy to schedule a half-hour call to talk to you about anything that you'd like when it comes to Infor. And thanks again for everybody that attended today. I hope you have a great weekend.
Thanks, everybody.
Thank you.
Thank you.
Thank you all.